What's going on, everyone? I hope you're all doing really well. So this is going to be this week's video on my trade breakdown, and after this we're going to go into the video I made on AU, and it's going to be a good video for you to watch because there's a lot of gems in there that I go through, talking on liquidity and the all the way down from my entry point and price mitigations and etc. But one thing to note is I did not trade on Monday, Tuesday or Wednesday because, as you probably saw in the Discord chat, I did say I was ill and my energy levels was really low, and I was trying to sort of continue with the Discord chat and engaging, helping, and also with my own trading as well, but I couldn't do that at all because just had no energy, and I didn't trade on those days. So I have only taken 3 trades, well 2 trades and a scale in this week. But as we know, the way we trade, we don't really need to be, it can take one trade and we're looking at a crazy percentage that can even make up our month. So that's what's happened this week. And the trade on AU from yesterday, which I'll go through, and what I also put into Discord, so we can have a look at that now. So just going to open up Discord quickly, and we can go to, where is it? So in my section here, daily markups, we had this that I put in, game plan for tomorrow morning. We have, you can see SOE, so a sweep of equals. Below that happens to be this demand zone that actually caused this whole break of structure into the new higher high. It started from down here, okay, and we had a play on liquidity. We tapped in, and this is what I was looking for. So once price come in, that's what I was looking for, reaction. And then we have this diagram here. So price comes in with lower lows, lower highs. Then I've been looking for the switch from structure breaks and price showing me it wants to go up from this area. And if that didn't happen, then we can anticipate price is going to go lower, and then we can trade the continuations from 15-minute breaks of structure or 1-minute reactions and continuations down into these areas here. But as we know, we had liquidity from here, so it's very likely price was going to come in to mitigate and then continue from here, and that's what happened. Okay, so we can see we had this entry here, but this is EU that I put in, and yeah, focusing on AU. Let's go back into Notion. So the first trade I want to go through, which was long on AU, pro trend, hourly order block from the higher low, and I did scale into the trade, which resulted in 10.13 both trades. And hourly time frame, we can see although we had this area here, price didn't really need to come into it. Okay, it's likely, but if we have lower time frame price delivery and reactions from here, then we can still bank the percentage from price even pushing up to this supply zone, and then anticipate price to come in to this area lower. Okay, so this is what I was looking at. So higher high, higher low, price correctively come back into this area, which is a slowdown in price, and this led to a new higher high. But we can see what we had was price push off but then pull back, and then it was this move here that actually led to a break of structure to the new higher high. Last sell candle, which is here, price come back in. That's where I'm looking for my entries, and there is entries short you can take as well, but as I say, I didn't take these because I wasn't trading. Okay, so back to Notion, we can go on to the 1-minute time frame, and you can see price come into that higher time frame demand. So that's the pink zone here. We come in, and then you can see very clean entry, momentum to the upside. We have a lower low, pullback, lower low, lower high, range, lower low, lower high. So the most recent supply zone would have been here from a 1 minute continuation. You can see price broke that, so supply failed, that created demand. Okay, imbalance candle, fair value gap, price comes in to mitigate the last sell candle, makes price efficient, then continues. So that's my entry. And looking back at this, I did trail on 1 minute structure, and you can see tapped in, and although I managed on structure points, once price moved off, I did move to break even, because it's just, you know, it's a good 4% or 5% from the highs here. We pull back and then we actually break structure. So I moved into a little bit of profit just below this low here, and then price pulls back and we put in a new high. Now looking back at this, we did take out that high there, so it's likely price was going to now pull back aggressively, which is what it's done. And one thing I'm testing is to actually set targets at areas or highs, or, you know, supply zones, price imbalances, areas like that, where it makes sense for price to come into and then reverse from. Okay, so I got stopped out on, you know, this low here for, I believe it was 5%. Yeah, so I was then still looking at this to get in from. We can see once I got tagged out, price ranged around a little bit, and we actually formed equal lows from this area here, and we have this area which hasn't been actually mitigated, and we also had imbalance left to fill. And this is definitely a liquidity entry, because we've swept liquidity from these lows. We tapped in, and I did use a 2 pip stop loss in this example, because price did come in quite aggressively, and I did actually set a target for just a 5 to 1. The reason for this is because it's just looking a bit messy. If you look at this chart, it's not really showing, you know, it's not showing too much. So I'd rather literally just set a target and get out with, you know, 5%. And, you know, with this one here as well, we're looking at over 10%. Okay, now definitely setting targets and trailing structure comes at your own experience and a bit of discretion, but it all comes from experience, knowing what price is doing, how it's looking, and yeah, so those are my entries for the first trade. Now we can get into the last trade, which you're looking at this thinking 1 to 60, which I did not actually bank all of that. I did partial, and I do get into this in the video coming up after this clip. So yeah, let's get into it. So pro trend, liquidity sweeps, AU long, 1 hour unmitigated OB or demand zone, hourly time frame. We can see what I just covered on Discord from this here. We can see we tap in, we take liquidity, you know, very, very simple stuff. We can go to a 15 minute, see what that's looking like. And we have liquidity from equal highs up here to target, and 15 minute inducement from these equal lows. People looking to get long, price comes in aggressively, taps into the 1 hour demand zone, and then from this point we're looking on our execution time frame to look for the switch from weak to strong hands, and then looking to get involved in the change in momentum. Okay, and then we can look into the 1 minute, and I will go into this in a lot more detail in a minute. But we can see price comes in, we literally bottom out, we stall, and then we start breaking bullish structure, and that was my entry. But I'll be getting into that in this next clip. So I'm just going to do a video on AU, and I think it'll bring a lot of value. So yeah, I'm going to get into this trade I'm in, so the hourly time frame. Now if you go into Discord and see what I was looking at, I posted this into there. So what we can see is we had bullish breaker structure, and I got involved in trades from here, from this valid order block area, which was, price could have gone up from here into new higher highs, but it didn't need to, because we have areas of inducement from these lows, orders, liquidity, stop losses, sell stops at these areas. That price is going to be targeting. And we also have equal lows, so a double bottom, retail double bottom. SOE means a sweep of equals, so basically it means a sweep of this liquidity, okay? And you can see that sweep was here. Well, it was actually here, but then we come in and we took liquidity, we tapped into this order block. As I'm sure you can see, we had a higher high, pullback, higher high. So we have an area here as well, which price could have come into, but you know, lower time frames show us the way. And so higher high, a little pause in price, inside bar, that's a range, and then a higher high, higher low. Okay, and again pullback, break structure, higher high, which in fact actually did continue up here to a higher high, but you know, the break that caused this move started from breaking this higher high here, and we have the last down close, last sell before the buy, refined to this candle, which happens to align nice with price sweeping liquidity and then tapping into that unmitigated demand. Okay, so that's the reasons for this POI. Now we can drop into a 15 just for a little look. We don't really need to be refining. We have an inside bar, but ultimately if price wants to come into this whole hourly area, then I'll be looking to buy from there. Okay, 5 minute little look to see the overall picture. We have, as we always know, price comes in with lower lows, lower highs into a higher time frame area. We want to be looking for liquidity points, so we can see we have another area of inducement. Now if you're unaware of what inducement means, it basically means people looking to get long, or it's giving them signs to get in, building, you know, orders, money, people getting involved. Price sort of comes off, but then it sweeps, you know, takes them out, and it builds liquidity, it takes liquidity. We have equal lows, and then you can see price come in, and you know, we come into the hourly area. So this is the hourly area. We come in, mitigate, and this is when we can drop to a lower time frame and look to see what price is delivering. Okay, so coming in, lower lows, lower high, lower low, lower high, lower low, lower high. We range inside that wick, pull off, lower low, lower high, and then this is really key here. So I've drawn this line on because price come in and it was able to form lower lows and lower highs. It was able to go lower. Price didn't fail to do so. Then we wick. That wick came below. So I'm just going to zoom right in because each candle is important. That wick came in to take the low, to sweep liquidity, broke and closed back above. So we just wicked it. We had the same thing here. We come in and we don't take out the wick, but we do fail to put in a new lower low, and we fail to go lower and close below. So that's showing us intent for higher prices and intent that price now wants to potentially start breaking bullish structure, and that's exactly what we had. So if we're looking at this, we have a range. Okay, so we put in lower low, lower high, and then we start range around. Okay, we then start breaking structure. So this is the move that broke structure. Okay, so these candles here are just ranging. This is the move here that has actually initiated out and breaking these highs. Okay, so we can mark that on as a clear breaker structure. And this is where I got involved. So one thing I did mention, this is at 2 a.m. I did set alerts, which thankfully woke me up, and I wasn't really sleeping too much anyway, because I've been not sleeping because I've been quite ill, but I'm alright now. But yeah, I set alerts at this area, and that was at 1 a.m. I do believe I was actually awake at 1 a.m. and then I set alerts and got triggered in, and that's when I was watching price, literally just watching it and waiting for the shift. And we've got the shift here. So breaker structure. This is not an aggressive entry because we've had reason to get involved. We've had a mitigation of the hourly zone, and now price is failing to go lower, and we have unmitigated suppliers as well that we can, you know, look for price to now push into. And people who are in sells on this, you know, they're trailing stop losses at these levels. So there's a lot of money and liquidity at these areas. Price is going to target it and then, you know, go from there. Okay, so entry, getting into my entry, as I said, the move that actually broke out of the range and broke out of the high, and these highs here, we tested supply, so we actually mitigated supply and then we created demand. The candle before last sell is that candle. I won't hover, so it's just that candle there. Doji, last sell before the buy, and you know, it's as simple as that. That's the entry. And then I don't really feel the need to be covering this low, because price doesn't really need to go as low as that, because it's already, I'm viewing this move here as a liquidity play on that low. Price wicked in to wick to sort of mitigate anything inside that wick, and you can see it's mitigated it, wick down. So I don't really feel the need to be covering for that low, which is why I didn't. So 1.5 pip stop loss, and we're off and running. So any scaling trades or trades that you want to be looking to wait for, you have one. Don't know why I said it like that. But yeah, we have this candle that actually come into this supply and didn't really break it, but it did actually close above that wick. And we have the last sell. This is sort of maybe taking the extreme, because, or not taking the extreme, sorry, the extreme would potentially be lower. It's quite subjective where your entry would be, but for me, the breaking structure was this candle. So you can be scaling in here. But if we move on, we can see we continue to put in a bullish structure. So more reason or more confirmation that price is going to, you know, continue up, and it's not just a fake out into a supply. And we have an area here that we failed to come into, so that's a clear breaking structure. And if you set an entry, you wouldn't have been triggered in on that one, but we have the same thing here. So another breaking structure, and if you was looking to take the wick, then you wouldn't have been tagged in. But looking at that last sell before the buy refined, then we can be looking to get involved in that. Stop loss would need to be 2 pips to be safe, just at the wick or the low, and then you'll be in the trade. Okay, I didn't take that trade, but these are the opportunities that you can be looking at. But as I always say, when taking these entries, the longer this continues, sort of this bullish order flow, after sort of the third entry, that's when we usually see a deeper pullback and a seek on the low liquidity, and then for price to continue. So a deeper pullback, it didn't really happen in this case. We just sort of broke the low and tapped into this unmitigated area, and then took liquidity from these lows, or that low there. Okay, that's why I only really take the first to third entry on the lower time frames from the higher time frame areas. Anything past that level, I'm looking to only take entries based on price seeking liquidity, from like literally an example like this. Okay, so if you go up to a 5 minute, that move that I just looked at, okay, so it's this move. Back to the 1 minute, we can see this is a breaking structure, okay, and we have another area or another level of inducement. So we've broken structure, we've come back into around 40% of this move from here. So we haven't come into this demand, and then we broke structure again. So although this is valid, we have a consolidation range, breaking structure, initiation, mitigation, whether you take the whole range or looking to take the order block. This for me is definitely a valid entry, but also be aware that it's quite high up from the 1 minute entry from down here, okay? And it also is a level of inducement because there is liquidity, although that they aren't matching perfectly. Well, we have this low here, but this is a level of equal lows and inducement. People are getting long in here, and price is likely, although it didn't need to come back to here, it is likely to seek liquidity from these areas and tap into this demand here. And I've marked it on like this because it is a 5 minute area, as you can see, last sell before the buy, and that's the reason why I've marked it on like that. And then price came in, and that would be more of a safer entry if you're going to be looking to take these, because the reason why is because everything below or previous to this sort of pricing here is efficient, and it's all been mitigated really. It's all efficient pricing, and it's been mitigated. The only thing not mitigated is this move here, and then we pull back, break structure, we come in, we get a reaction, pull off, another reaction, we come in to mitigate, okay, take liquidity from in here, a lot of liquidity in here, and then we continue. And I've marked this on, but it's sort of, well, it's definitely a breaking structure, but it's not something I'll be looking to take. If we go back to a 5 minute, we can see, look, price clearly respected this area, and the lower time frames showed us that. Okay, so I did not scale into the trade because I did go back to sleep as soon as I got to break even on this trade. And looking at the 5 minute, we can see, well, firstly, when do I go to the 5 minute? Well, I go to the 5 minute once the 1 minute becomes a bit unreadable and messy. So you can see, look, it's just a bit messy. Although here we have breaker structure, we come in, we fail to mitigate to where we would be looking for entries. We push off, and it's a bit messy, breaking structure, reaction, and then range. Okay, this is when I go to a 5 minute and just look to see what's going on. And I was looking at this wick as a level, but it's not really something that's in my trading plan to take because of how it broke. And it come in, it's a bit wicky, and although it is being respected, we are now trading at the EQ of this wick. Now, for me to take a trade like this, I would be looking for price to come in, but then drop to 1 minute, and then look for more confirmation on a break of structure and liquidity sweeps. Okay, so for now, it's not really looking valid. I am in this trade on, from down here, and I am managing on, if you're executing on a 1 minute time frame, it's good to, it's not bad to manage on that time frame, and it is something I do dependent on the trade. If we're with the trade or with the trend or against it, it varies, but you won't always be getting sort of very, very high RR. Still really good R, but if you want to be looking at the higher time frame and the longer term perspective, there's no real reason why this can't come into, you know, the highs that we was previously at on the 25th. That's the anticipation, because we are bullish. Although we've broken structure, but we know this as liquidity. It's not a change of character. It's just, you know, this is overall it's a range, but we know we have an unmitigated area, and although this may pull back deeper, you know, it can still push up. And that being said, also it doesn't need to do that. This can, you know, in hindsight, when we look back, it pushes down from here. We'd be like, oh yeah, look at that wick in there, or look at this supply zone. That's why it went down. But in reality, overall time frame, we are bullish. Okay, everyone. So this is the next day now, and this will be part 2 into this AU breakdown and going through the trade and a bit of price action. Now, where I just left off on that previous clip was talking on AU being bullish. Overall, sort of longer term, we are bullish. You can see that was the high that we was looking at. Price did in fact take the high out very impulsively, which was news. And there is some very key bit of details in price from these wicks and this mitigation that I do want to cover and go through my trade and how it ended up. So hourly time frame, we can see price, you know, we had the sweep of liquidity. Now when we have areas of liquidity that we can use to our advantage, from, you know, price sweeping it and then tapping into an area like this, I do somewhat want to be more aggressive, more lenient with my trade management, because obviously the markets are always seeking liquidity and they're trying to find it. So once price sweeps it, it's a lot more likely price can then commit in, you know, our direction if we're using it to our advantage, as you can see here. So that is why, you know, once we get that, I want to be managing trades more lenient and not as aggressive as, you know, if we're just playing for a shorter term play. So let's go into a 15. Now, one thing to mention as well, although this did run for highs of 1 to 60 or 1 to 62, I'm not going to lie and say that I just got in here with a 1.5 pip stop loss and just left it alone and managed on hourly structure. Although that is how I trade, you're not going to be doing that on a 100 grand account or a million or 10 million, whatever it is, you know, 6 figures, 7 figures. You're not going to be, you know, able to say price pushes off. Even this move here to here, you're looking at around 10%, and that could be 10 grand, 100 grand. You're not going to be fine with price pulling back to your entries to take you out. You may be, but the majority aren't, because it's a crazy amount of money. And especially once price comes off and, you know, 60% coming through, letting price pull back this much. And, you know, there's no saying, although this is a move down to take liquidity from this range here and mitigation of the very last sort of break of structure, and we have the same thing here on this wick, which is a 1 minute sort of mitigation from the news before price committed. We don't really know this is going to happen, although in hindsight it makes textbook sort of sense what price is doing, but we don't really know that's going to happen. So for me to just not sort of partial any part of this trade, or just leave my stop loss right down here, isn't scalable if you're trading on a million or even 50k or 100k. I think it's definitely important to partial. and I don't. That being said, I don't really partial, because I do trail on my stop loss unless there's a lot of profit that I'm in and that price needs to potentially pull back to seek liquidity. Okay. Now don't get me wrong, I am working on this because you can definitely do it, but there's nothing against sort of taking a bit of profit off the table once you're running in a lot of percentage. Okay, so that being said, we can, in that last video I did already go through my entry and this bit of price action here. So what we can look at is what's happening after that. Okay, so what we can see from this bit of price, okay, so that bit of price there is a clear range, and once price broke structure here and it was ranging, I was very aware that we had news at 3 p.m. and I did partial at around this area. So we broke structure, we pulled back, and it was around this area here where I did partial, and I did take off 50% of my trade. So it was running around 20%, I think, that I partialed. So I banked 10% of my position and then left the rest to run. I knew that news was coming out at 3 p.m. So price pushed down, took liquidity from anyone long, and the very last sort of candle, or the last sell before the buy that broke structure, is here. Now that is definitely in hindsight, because you could be arguing it's here, but that's where price came into. Very last move before we broke structure, well, with a wick, and then we can go into, well, we go into it in a minute, but if you look at this wick again, that's a 1 minute push back down into a sort of the last order block, and then price impulsively moved up at 3 p.m. Or was it 2 p.m? Anyway, yeah, I did partial and then left the rest to run, and then I did close up just before markets closed on the rest of the position. And if we go into a 5 minute, we can see, look, we have equal lows, a clear range, and the move that caused the break did start from here. Price come in, and we have a wick that come into this last sell again. Last sell before the buy, we come in, so we can go to a 1 minute. We'll get a bit messy, but we can see it's saying 2 p.m. at the bottom, but pretty certain it was 3 p.m. But anyway, we can see we have the last sell. Oh, last sell there, if I can get it on correctly. Okay, we come in to wick that, and everything here is efficient. And if I just use the replay tool a second, we can just come into before that news came in. So we broke structure, we left imbalance, and it really started from this move here. And then you can see that's what price come back into, and then you can see, look, we then reversed. All orders have been mitigated, and price can then continue. So 15 minute, you can see that high gets aggressively taken out because it now has a reason to. We also had liquidity to target from equal highs, and if we just come out of replay bar, we can see that's where price is now. And I do want to actually just go to a 15. I do want to take price back to around here quickly and go to a 1 minute. So I did go through this on the first part in this video, my entry where we failed to continue putting in lower lows. We break structure, mitigate, very clean entry, and then we have some other entries, one here, and then we have an unmitigated area here, price come into. And if we go to a 5 minute, just go through price. Okay, just continuing on. One area where I was looking at was this wick here. Okay, although it isn't the cleanest, there's always something inside wicks. As we know, we respect that. We break structure, and we then come into this last candle here. So we break structure, and we have the valid order block here. Price comes into, oh, that's happening again. Hold on. Okay, and that's ultimately what we respect. And then we do come down to take liquidity before the news. Okay, so we did form equal lows, and we had a lot of liquidity at this area. We come in, and then you can see this is what happens next.